This is the Traders Exclusive Live Trader Showcase. I'm Sherry. This is the quarterly event where we feature expert traders and bring you training and insights from 20 expert traders. We have prize giveaways for everyone in attendance. We're going to do some drawings. We have some surprise interviews. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find the recordings for this event. And before we get started, we have to share a quick disclaimer. You know it. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. You have to do your own research, and you should always, always verify and research. Rick Sadler of Hit and Run Candlesticks is always amazing. So he's going to talk to us about one of his favorite trades, which is the rounded bottom breakout. And I I giggle a little bit every time I read that because, anyway, we won't go there. Anyway, Rick Sadler is a swing trader focusing on price action, chart patterns, candlestick signals, and trade management. He mainly uses the daily chart, but tends to be a short-term swing trader. Rick strictly trades stocks and monthly directional options, which is buying calls and puts. His primary focus is on charts and how each trade is planned and managed. And Hit and Run Candlesticks is therefore more appropriate for someone who trades stocks, ETFs, and simple directional options, which is the buying of puts and calls, on a swing basis, which is also a 1 to 5 days on average. Rick is known for his rounded bottom breakout, pinball, and 3/8 trap trades, using his T-line and trendicator indicators, and loves using the T2123 indicator for an indication of market momentum. Welcome, Rick. I'm so glad you could be with us. This has been an amazing day, so I appreciate it a lot that you're going to be with us.
Hey there, Sherry. How are you? You kind of sound like you're getting a little punch drunk with all the webinars today.
Well, it has been quite the day.
I bet.
But the verbiage in everything. This is not typical English language, and even though I read it ahead of time, it's a lot to put your mouth around at the end of the day.
You know what? I totally agree with you. It's hard, yes. So anyway, what a fantastic job. I've listened in on the last two folks you had on, and I got to tell you.
Oh, hold on a second. Hold on.
So very much. Appreciate it.
Hold on. You listened to the last two presenters, and I made you an organizer, and it cuts out your microphone for a second. So could you tell me that again?
Oh, well, I listened to the last two of the presenters, and I just, what an amazing presentation for both, and I'm just honored to be here. I just glad to be, have a slot and being with such good people. Anyway, I just really appreciate it. Thank you. Very nice.
Thank you. Now we're looking at your PowerPoint.
Okay, good. My big long PowerPoint.
It's not the slideshow.
Yeah, my big long PowerPoint. So, like you said that you have, you have all this verbiage, and you've read through it. But when you go to actually put it out there, you're right, it's a different language, and it's kind of hard to get it out there. And by the end of the day, wow, you're crazy. I'm that way with PowerPoints. I can't do PowerPoints because I can't stay on track. I start moving away from them, and I get sidetracked. So that's why I like to do live presentations, totally live.
Well, by all
And
means, do a totally live presentation then. Just junk that thing.
okay.
I got a question for you though before you get started.
Yes, ma'am.
Did you want to message me a prize, or are you going to wait and do that some other time?
I had many. I'm sorry, and I did
Okay,
forget
it's
about it.
okay. No
I did.
worries, no
I'll
worries.
tell
We
you
got a
what.
lot of prizes.
I'll tell you what. Here's a good prize. We've been talking about. We've been offering folks a lifetime membership at a pretty good price. I'll tell you
What?
what we'll do. I'm not even going to talk about the price. Some people that may have gotten our emails already know it. That doesn't matter. So here's what we'll do. At the end of the presentation, our prize will be a lifetime membership to Hit Run Candlesticks.
What?
Yeah, so one lifetime membership.
Well, and the reason I brought it up is because I want to award it. I want to do the draw while you're on with us.
Okay, yeah. By all means.
And then I had one question for you.
Sure.
I wanted to know, if you weren't a trader, if you weren't a professional trader, what would you be?
Professional fisherman.
Yes.
I love to fly fish. I love to fly fish. I grew up in Alaska, and I've done a lot of fly fishing, a lot of fishing there, and I just love to fish. If I
where are
wasn't
you
a
now?
trader, what would I be? I'm a mechanic by trade.
Uh-huh.
Work on cars, things like that. I don't want to do that anymore.
Uh-huh.
No, you know what? I would want to be a professional fisherman, I think. True story. True story.
That's fantastic.
Yeah.
That's fantastic. All right. Well, I just needed to know, and
Okay.
I will now mute myself and let you take it away.
All right. Sounds good. Thank you so much, Sherry. I appreciate it.
Thank you.
Okay, everybody. Hey, I want to welcome everybody for being here. Thank you so very, very much. Again, thank you to Exclusive Traders for having me here. Like I mentioned, hang around. We have a lifetime membership to give away. Excuse me. I've been in the trading room all day, so I have to admit I'm a little bit parched, and it's been a long day. Crazy with all the Fed stuff today as well. Excuse me. So I want to thank anybody here that is from Hit and Run Candlesticks or Right Way Options or BYOB Trading, all three of those. That's part of the Hit and Run Candlestick family we have. So if there's anybody here from our group, hey, thanks for being here. I absolutely appreciate it. Okay. The next thing I want to do is, and by the way, you see my big long PowerPoint. This is how many slides I have, and then we're going to look at charts and we're going to dive in and really get to the crux of things. Okay, so I have to go through this whole disclaimer thing. It just, I just have to. It's just the way it is. Bottom line, this disclaimer pretty much says that trading is not for everybody, and that trading is risky. Okay, it really is. Look, don't trade for trying to make a house payment or a car payment. You trade with extra money, not with money you have to feed your family with or pay your bills with. Okay, that's not what you should be trading with. So please keep in mind, I'm not a financial advisor, so I don't give recommendations or anything like that. I do share all my trades with members in the trading room and on our app. If you have the app, by the way, you don't have to be in the trading room. You could actually be at the dentist's office, and you don't even have to have your computer on. The alerts will come through your app. So that's something to keep in mind. So I'm assuming everybody read this, right? So if I tested you on it, you would know. Bottom line, trading is risky. Here's a second thing. I have this up here of really what this is something I'm going to be sending everybody to our database. A lot of our database has this already, but I'm going to send it again because it's probably been a year since I've sent this out, and there's new people that's come on board. So I want to get this sent out. And what this is just a trading worksheet. It helps you to keep track if you're in a trade, if you're correctly in a trade, or not correctly. think about it as a checklist and something like this. So you have a checklist of things you need to make sure of before you enter a trade. Like right here, this is a checklist that I tend to use. So I take a look at this and I can check in here. Yes, whoops, that's pretty poor, isn't it? Let's try that again. There we go. I'll check yes on this, or maybe no, on this one, or bullish or bearish, and think of that as your checklist. So is everything working for you? And, all the conditions that you might want, well, let's talk about a long trade. If are we trending? Is moving averages in the right place? Maybe you use MACD. Maybe you can change this. Maybe MACD is one of your things, and you can add that to it. Just making sure that all your conditions are there, because sometimes you'll have the TV on, you're listening to a financial show or something, or you're listening to a trading room, or you get an email sent to you, and then somebody says, hey, I'm looking at XYZ and it looks absolutely fabulous and I'm going to trade it. Well, it might be for them, and the truth of it is you don't know everything they're looking at. So you go look at it and you buy it, and maybe it doesn't even fit your bailiwick. And by going through a checklist, at least you can check and see if it fits your bailiwick. I noticed on here too, I don't have it. I have another one, a weekly checklist to make sure you're making money throughout the week, and I'll be sending that out to you. So I'm sorry it's not here. Anyway, this is not important for what we're going to do today, but I just want everyone to know you're going to get one, okay? So I'm going to kick this out of the way. Let's make it go away. I'll just minimize that. And let's take a look at some charts, and let's talk about rounded bottom breakouts, okay? I want to chart with this chart right here. We're going to use SPSX because it happens to be SP, we'll use XU, we'll use that. There we go. I want to give a short history of the rounded bottom breakout, just a short history. The rounded bottom breakout, well, what the rounded bottom breakout is doing is it's playing on major moving averages. The two major moving averages that it's playing on is the 200, that's that red line right here. That's the 200 period moving average. And it's playing upon the 50 period moving average, which is that blue dotted line right there. So for anybody that's been trading for a few years, you've probably grown to realize that charts tend to gravitate to major moving averages. The 50 and the 200 are two major moving averages, and price tends to gravitate to them. Let's see, from say a chart is moving up, price will move down toward that 50 and then maybe down toward that 200. And it's the same way from the bottom side. Price from down here will have a tendency to move back to that 50 period moving average, and then from there to the 200 period moving average. Now, this today, what we're talking about is not this part of it. It's only from the 50 to the 200, okay? So we're playing this revision to the mean type thing. And if you go look at any chart you want, and let's just go look at the SPY here. If you just take a look at the SPY, there you go. Look how we came back to the 200 period moving average. And please don't take my word for it. Go look at charts. Spend some time looking at charts and prove this to yourself. Prove how price returns to that 200 period moving average. See how we're up here and we returned to it, we pulled away and we returned to it. And the same thing with the 50 period moving average. Price comes from the bottom, returns to the 50. Price at the top will return to the 50. This will happen guaranteed in every chart you look at. Now, where the caveat comes in is where on the chart it happens. So for instance, if you're looking at just at a chart, when I say I guarantee it'll get to the 50 or the 200, well, it might not in this span here. Let's do these months down here. It might not in that, we'll use 2 months in that span of time. I mean, it might not, right? A trending chart might trend for 2 months, whether it's trending up or down. It could be trending away from those two moving averages. On any given month, it might not return to those. So that's the caveat. But what we want to do is look for those charts. We want to bring those charts to us. And there's ways to do that. I'm not going to talk about scanning today unless we just run out of things to talk about. But you can, there's lots of scanning stuff out there. I use live trading alerts, LTA for short. But you can drill down, poor choice of words. You can funnel stocks to you by how you code it, and you can just look for those charts. I'll show you kind of what I mean. And so while I absolutely 100% guarantee all charts will return to their 50-period moving average and their 200-period moving average at some point, and you'd be surprised how many times it does that. And that's what we want to take advantage of. All right, now what I want to do is go back to this SPXU, I think I had up, yeah, XPXU. And a couple of things we'll talk about this dotted line here in a moment, a few moments maybe. We'll talk about that. So with this, there's a couple things we want to do. We want the 50 and the 200 spread out. This is important. We want this spread out because we want to be able to make money. If they're pinched together, then this strategy, it's just not the strategy. Strategy is about these two moving averages being spread out. This strategy is about price. Let's see here. I'm going to use red just because it shows up really well. It's about price that breaks out, say, over the 50 right there, and that runs to the 200. Now, they don't all run like that. I've got some examples to show you, you'll see. We want enough space in there. Now, the round and bottom breakout, that is the trade. I'm not saying that the chart can't go higher. It can. But the trade itself is just from here and just to there. And look, anybody that's been trading for more than 24 hours, you know that there's no guarantee the price is going to go from here to here. It could move halfway up. Here's an example. We're over the 50, we gapped up here and then tanked back down to the downside. So there's no guarantee. You have to be a chartist. And you know, I pretty much believe that I don't care what strategy you follow. I really don't care. If you don't have a concept of a chart and how a chart works, I just don't feel that there's any strategy out there that's going to actually meet its potential. So you have to be a chartist somewhere. So anyway, what we're looking for is a spread of at least 10%, okay? That's what I look for. There's nothing wrong with making it more. What may happen is the amount of trade ideas that you'll receive might be less. If you were to collapse those, say to 5% max, well, then you're going to have a lot more. The problem with that is you're going to have, I don't know if it's a problem. I've gotten to where, up until 4 or 5 years ago, 4 years ago, I didn't trade options. All I traded was stock. And I tend to stay with the cheaper side of, price cheap, say under $15, something like that. So it's pretty easy to get this spread of 10%, but some of these higher price stocks, you might not get that 10%. But on the other hand, even if you had 5% and you're trading an option, you may have from the stock price, it may only be 5%, but the option price from the 50 to the 100, I don't know, 15%. There's nothing wrong with that kind of money. That's excellent money there. So key points, let me get rid of all this. A couple of key points. We want this spread right here, right there. Let me write this too, okay? Oops, it's not pen. Pen. Guess it won't let me do that, all right? Pen. We want this 10%, right? The next thing we want is we want the 50 period moving average trending. It doesn't always have to be trending down over here, but we want it at like this, at this level here. We want the 50 period moving average trending down, maybe flat, but we absolutely want it below the 200 period moving average. So the 50 below the 200, 10% spread, and you can see how that's trending down. That's what we want right there, trending down. And then we're going to look for that buy signal in here, and then we're going to look to make money to the upside. And what we're going to do is look at some charts in the past that may be showing up today. Not that anything in here is a recommendation for buy, not at all. Yeah, not at all. And anyway, let's get to looking. Let's take a look at some. Let's see if there's any questions. I love questions, so if there's any questions, please shout them out, and I'll see if I could figure out how to answer them. I never can figure this out. Undock. Oh, yeah, maybe I just did it. There you go. Maybe I did. Okay, so if there's any questions, please ask. All right. Let's take a look at CVNA. And the first thing I want to show you is, look at that right there. That's what we call a rounded bottom breakout. And if you take a look at the 50 period moving average, if we just took it here up to the 200, that's 286%. That's insane, right? That is absolutely insane. But it is what it is. So there you go. So here we pop up over the 50 period moving average. We're looking for the trade to continue up to the 200. This is a good time for me to talk about this moving average right here. All right, please grab a pencil and write this down. All right, please write this down. It took me a year and a half or so, maybe a little longer, to figure this little moving average out. It's not your basic moving average. So please, I'm just killing some time till everyone grabs a pencil, okay? Okay, here goes. We call this the dotted deuce. And it's the dotted deuce because it's the 200, just like this red line is. It's dotted, and it is the 200 period moving average. Here's some things that's changed up on it though. The average type is front weighted opposed to simple or exponential or whole. It's front weighted. It's the average of the low opposed to last price. Most programs, and in fact, I don't know of any program, if you put the 200 period moving average up there, it will automatically come up with the last price or closing price. So opposed to last price, we are using the low, all right? It is the 200 period moving average. It is front weighted, and it is the average of the low. And that's how I arrive at that. Took a long time to get that. A lot of trial and error, a whole lot of trial and error. So anyway, now that we have that, it is a target. It is one of our major targets right in here, that dotted deuce area. So we pop up. We'll talk about entries in a little bit here, but what we're looking for is an entry, and everybody should have a plan for an entry. That everyone just should have that. You should have a couple plans, maybe like a staple for an entry. something that you are comfortable with, something that you can work with all the time, something that's a no-brainer for you, and we'll talk about that today. Talk about what I like, and then you can certainly use it or modify it or throw it away, whatever you want. So here we are, pop, boom. Look at that great target right there. Absolutely a terrific target. Now, I don't know where somebody might have entered this. Everyone's a little different, but that is in the neighborhood of 138%. Sweet, right? Yeah, sweet. So let's take a look here. Can we call that a flag? We sure can. We pop up, we pull back, nice little flag. We can see right here that it holds. We have a bullish engulf. Would that not be a buying signal? I think it might. Another place that we might look at an entry is a breakout of this big candle right over here. That might be an entry. Even if you entered here, if you entered halfway on this candle, you're talking 61%, bucket of money, bucket of money. And by the way, you need some of these good winners, but because you are going to have losers. Please don't let anyone kid you about that. You will have losers. It's just part of trading. But you got to have some of these winners to offset some of those losers, okay? Just being honest with you. I don't mean to hurt anyone's feelings, but I guarantee you're going to have losers. We'll talk about some different entries in a minute, a couple minutes. We'll definitely do that because I want to talk about what we call the 3/8 trap, and then below the highest low, the highest high in 5 days. That's something I look for as well. So we'll look at that too. So what happens is this dotted deuce area here line, it acts as pretty good support. Speed bump is what I tend to call them. Speed bumps going up, speed bumps coming down as well. And it just, boom, bounced right off of it, just like it's supposed to do. Again, don't take my word for it. Just go look at charts and just see how it acts around these moving averages. So we just kind of drift to the downside. And by the way, in all this drift, it's still around a bottom breakout. Anything between the 50 and the 200 with that 10% spread is still a 200, or still a round a bottom breakout, RBB for short. So here we popped up, which we failed right here, okay? But if you bought it, let's move that. Say you bought it, let's just split the middle. We're talking 20%, 21%. It's not too shabby, but it did fail. So it failed. Well, guess what? It's getting close to coming up again. I did put this on my watch list today. So I'm going to wait for an entry on this. The dotted line, the dotted dots, the green and red dotted dots. This is what we call the trendicator here. Now I'm going to show you another chart that really shows these off pretty darn good. There we go. I like that right there. I'm going to get rid of all this. So what we're looking for is the trendicator to turn green for us. And this is what I mean right here. So if we're in a downtrend, and we use this in many other strategies, but here's how I'll show you how I want to use it in the rounded bottom breakout. So here we are in definite downtrend, no questions about that. And then all of a sudden we turn into an uptrend, we turn green. So now that's an uptrend. We'll go back and look at this and you'll see where this, I'll show you where it was above the 50 period moving average. And that's really what I want to see. So over here, see how we're red and now we're turning green. So what we want is this to remain green. So we need another couple days on this. We want this to remain green because we like a couple 3 dots, and we want this above the 50 period moving average. I'll show you what I mean now. So let's come back over here, back over here. There we go. So see how this crossed up right here. Now I know a lot of people, I've even done it. I bought when we've moved over the 50 period moving average. But remember that checklist that I talked about on the PowerPoint slide? Remember that checklist? Well, that's one of the things that you might want on your checklist is you want a trend. I want a trend. I don't know what you want, but you might want a trend. So the way I look for a trend is when price is moving up. You can draw trend lines if you want. I have no problem with that. You can put trend lines on it. Or if you just look at moving averages, they're just trend lines themselves. And when you get trend lines stacked on top of each other, that's the same thing as a trend. So right in here, you want to make that checklist, okay? Checklist. So right in here, I'm gonna turn this red just so it's easier to see in there. So that's okay to buy. If that's your thing, if that works for you, fine. I want a little more love on there though. So I like to see the trend indicator above the 50. I'm willing to give up some profits. Especially when you've got 200%, 150%, whatever it was, crazy amount. Nobody needs an extra 20%. No, you don't. So I want this to cross over, and now I'm looking at the best entry. So like I said, take right here, for instance. This might not be a buy for some, might be a buy for others, but for me, we're not over the trend indicator here, and one dot doesn't get it. We need to really get going. And what we want is that black line right there. That's called the T line. That's something I created years ago. If it wasn't for that, I wouldn't be here today. I wouldn't be. I would have blown my account up and been done if it wasn't for that black line. And I want that black line to be above the trend indicator. So I want the trend indicator to be above the 50, and I want the black line to be above the trend indicator. Let me show you what this might look like right here. This white line is the black line. It's just on a black background. I have changed color. This is the 8 exponential moving average, or what we call the T line. The dots, that's the trend indicator. So I want to be above that 50 period moving average. I want the T line above the trend indicator. Now I can shop for an entry. One of the entries, and you can see right here, we haven't accomplished that yet. So I'm waiting for that, patiently waiting for that to happen. Let me show you one of the entries. So I really didn't mean to spend this much time on one stock, but we'll get there. So I'm going to put up another moving average. There we go. And this is what we call the 3-8 trap. This might make for an entry. Anything between the 8 or the T line and the 3, the green line, would be the entry. So here's the entry right there. There's the trend indicator over the 50 period moving average. That would have been the entry. Nice bullish engulf right there. Also, we would actually have a breakout of a bull flag on that case. So can you see? I hope everyone can see what I might be waiting for over there. I'm gonna go look at another chart just because we're spending way too much time on one chart. Let's go take a look at Google, okay?
Hey, Rick.
Yes, ma'am.
Adavan asks, do you keep the trade 2 days or 5 days if it goes wrong side of your expectation? Also, do you sell it once it reaches the target price?
Last question first. Yes, I absolutely sell it when it hits target price. Not greedy. If anything, I'm not greedy. In fact, I probably leave more money on the table than I should. So now the rest of your question. What if it goes against me? Can you read that first part again, please?
Yes, it says, do you keep the trade 2 days or 5 days if it goes wrong side of your expectation?
No, we want to put a stop on this. I'm going to move this line. During real life, I never keep that green line up there. It drives me absolutely crazy.
Okay.
Oops. So take Google as an example. Right here, Google was around a bottom breakout. Now it certainly somebody could have bought it here, but we hadn't crossed over. We gapped up and we pulled back. That might have been an entry now. That absolutely might have been. So what I want to do is, what if Google went against? So let's say this candle right here pulled back, maybe further than you want. I'm not going to wait 1 day, 2 days, 3 days. No, I'm not saying that that's wrong. Everyone has their way to trade. What I'm going to do is if I buy this, let's see, where would I buy this? Probably, okay, let me put that 3 up there again. There you go. Let me make sure that's the 3, right? Nope, that was for bearish. For bearish, we use the same thing, but we use a low instead of a high. So bullish, see how we pop up, hit the dotted deuce, and we pull back? That would be an entry there. That would be an entry here, an entry here, an entry here, an entry here. I look at these candles and I can pretty much see that if we get below this candle right there, again, maybe it's just, I've been doing this 35 years, I don't know. I can just see that below that candle, I'm not going to want this chart. So I'm not going to wait. If this goes wrong, I'm not going to wait, 1 day, 2 days, 3 days. If I cross that stop, I want to be stopped out. I don't want to keep throwing good money or bad money after good or whatever, however that goes. I just don't want to keep throwing money, let it keep going, because how do I know it's going to turn back up? And you don't know that. There's not a trader alive in this world that knows that answer. And you don't want to start playing this down game. I just don't want to do that. I hope that helped. And we'll look at some more charts, and I'll make sure that I talk about a stop and entry on those, okay? I'll make sure I do that. So,
okay, and you have 2 other questions, but I don't know if you want to answer them now. Do you want to wait until you're done?
Nah, food, fire, I love questions.
Okay, so one is, what is trend indicator made of? And I'm wondering if that's a general question. I don't know.
Nope, it's a good question, actually. Really good question.
Okay.
So what the trend indicator is made of, by the way, this program you're seeing is TC2000, okay? Not everybody uses TC2000. I'm not aware of any other program that has it. Now, I know that in our trading room, we have a lot of TOS users, and I believe they've created a code. Now, I don't know what that code is. I don't have that code, but I know that I'm 100% sure there's that code out there for it, okay? So what the trend indicator is, it's 2 indicators put together. By the way, this was a late night, couldn't sleep accident, the whole trend indicator thing. And here's what it is. Number 1, I use the 17 exponential moving average. Watch those red and green dots right there. See, that's just the 17 is all it is. 17 exponential last price. I'm just turning it off so you can't see it. All right. So that's the first piece of this indicator that you need. The second piece is called, actually I did this for somebody today. It's called the volatility stop. This is a indicator on TC2000 right here. And our settings are 10 and 0.10, okay? And then we just make an uptrend green, a downtrend red, and then the data source, we change that to our 17 EMA, okay? Now, this is actually, I could probably do an entire webinar on just this. And this is probably one of the coolest things. And I'm gonna show you something that's super cool in just a second. So I wanna make sure we understand that. If you're looking for this somewhere else, I doubt you'll find it. I've never, ever heard of it anywhere else. But like I said, it's not that you have to have TC2000. If you have TOS, I do believe there's been a code written for TOS. TOS might not know what it is, but our members know. So anyway, 10-10, red, green, use the 17. Now, watch this. I'm going to come over here to this chart right here. I'm going to get rid of all that. And I'm going to take away the 8 exponential moving average. Look how cool that is. So watch this. Oh, where is it? There it is. Be bullish. Be bearish. oh, there's a certain amount of chop you're going to get into. I can't help you with chop. That's not true. When we enter chop, go give your dog a bath. Go get your hair cut. Go to the doctors. Do stuff, but don't do market stuff in chop. You won't make any money. The majority of people won't make money. So when you enter chop, when we're moving sideways, just go away. Save yourself a ton of grief. Be short. Be long. Be short. Be long. Be short. See what I've got going on here? Chop. Be long. So trade in the direction of that little tool right there. So if you're short Google, we'll go over here. Why would you want to be short Google right here? Now, I'm going to tell you a little story. This moves up. At this point, I'm going to add the T line back on there. Okay, I'm going to add that back. Now, this is a fast moving average, the 8, opposed to the dots, which is the 17. So when we're trending, two moving averages like that, why would you want to be short? So why would you want to be short when the white is above the green? White is above the green, white above the green. Now you might want to be short right here, yes, but why be short here? Now, in today's market right now, in the current market we're in, some people might say, well, the market's going to go down, so I'm short. Okay, look, I'm not going to get in a battle with you over that one, but it's been now a month ago probably. I had a phone call from a person, true story, a grown man, was in tears because he lost all his money. And here's what he did. He had it in his mind that the market is going to tank. I don't think it was Google. In fact, I know it wasn't. I can't remember what the chart. Maybe it was just he bought SPY puts. Maybe that's what it was. So he buys SPY puts. Okay. I guess we should look at the SPY, shouldn't we? There we go. How's that? You know what? It might have been over here that he did it. Maybe it was over here. So, like I say, all the bad news, all the crazy thing, maybe it was right here now that I think about it. Yeah, we'll stick with this, right? He just had it in his mind that the market is bearish. The market's going to tank. You know, the S&P 500 is going to drop. Boom. So what'd he do? He kept buying SPY puts. He would buy more. He would buy more. Holy crap. Well, unless you've got $1 million freaking dollars in your account or more, at some point, you're going to have to pay the piper. Well, his account blew up because he kept trying to trade short. Well, stop trying to trade short. Just stop. I mean, I didn't tell him that because this was a sad story. This was a very sad story. It really, really was. Well, I've heard from everybody, and I just don't feel that the government is doing the right thing. I just think we're going to tank. Oh my God, interest rates are going higher. Oh my God. Look, I'm not going to battle that battle with anybody here. If that's what you think, that's fine. And you may absolutely be correct. 100%. Why would you be short? I don't care where you think this market is going. Because one thing that this person did not know or didn't realize, and I'm not sure anybody could have told him this, is that how long that trend would keep going. Well, it finally broke him. Finally broke him. How did he or I or anybody for that matter know that we were going to turn right here? Let me make that red. Turn right here. Well, nobody really knows. Price action, that's what the tools are in the chart for. This chart could have continued on a bullish trend until it wasn't anymore. What a great tool to point out, should you be long or should you be short? Isn't there a song, something like that? I don't know, something. Should you be long or should you be short? Here's the cues. Should you be long or should you be short? Which is it? Only you as a trader can answer that question. I don't know, what you're looking for. Maybe you do have more money than you know what to do with. And maybe you do have the funds to be short, add to it, add to it, add to it. And if it kept going up, you could keep being short because you might have the funds that could eventually pay off, but you have to wait it out. So what a great little tool. I hope I didn't get carried away with that. I get pretty excited with this little thing right here. I get real excited about it, to tell you the truth. Great little tool. I hope I answered all the questions. Sherry, you said there was one more question, I believe.
Yes. Do you know, wait a minute, can this be applied to trade intraday E-minis? And John also followed up with, do you know if the 17-hole moving average will be close enough to the trend indicator?
The 17 hole, let me show you something really cool.
HULL?
Yeah, HULL. First of all, yes, it can be traded intraday with the E-minis. There's the 15-minute chart. Look at that right there. Here's the hourly chart. There it is right there. Be short, be long. This might be the beginning of a short. Right in here. Right there, we turn from a short to a long. That might be the beginning of a long. Okay, so the question is, can it be used with the hull? Check this out. Did he mention a moving average or just the hull? Do you know, Sherry?
Let me just look. He called it the 17-hole moving average.
Okay, fair enough. You guys keep your eyes on those dots right there. Keep your eyes on those dots. Now remember, our data source is the 17 exponential moving average. I'm going to change this to the hull. Oh, there it is. I don't know what I'm thinking. Sorry. I'm going to change this to the hull right here. Now watch those dots. Look how they change. So the answer is yes. So let's do this. And let me get my little pen out. For this purpose, I think I'm going to get rid of the T-line because I don't think it works with this that well. Maybe if we put it on the hull, it might. So now let's do this. And I don't care what moving average you choose. It doesn't matter. You can use whatever you want. Wouldn't it make sense to be long? Would it make sense to be short? Wouldn't it make sense to be long? See where I'm going with this? Cool, isn't it? Yeah. Commercials, shaving cream. You guys get it? Does that work? Make sense? There should be a whole lot of booyahs on this one right here. Any question? If there's any more questions about this, please shout them out. Otherwise, we're going to go back to the rounded bottom breakout, and I'll put that to use. Man, that's bright when you go from the black to the white background. Anyway, I hope that answered your question. Okay, let's take a look at another chart. Let's take crowd. This is a crowd favorite right here. My attempt at a joke. This is a crowd favorite. Take a look at the trend indicator. Oh, wait a minute. Yeah, this one is still where I normally keep it. Man, isn't that pretty cool looking? Look at that trend. How sweet. Look at the red. Be short. Look at the green. Be long. Sweet. So what we're looking for now is we want to look where we're 10%, right? From the 200, from the 50 to the 200, there's 39%. Not bad. Not bad at all. Is this still a trade here? Well, let's go see. From price, there's 10%. Is there anybody in the room that's going to give your 10% away? You know, hey, you just made 10%, which this is not setting up for a buy right now. So let's just come on right back here. Potentially 15%. So if somebody traded this and made it 15%, are you not going to keep your money? Is it not worth it to you? Are you just going to toss it out because it's not 80%? I doubt it. Most people are going to take their money, put it in their pocket. Don't blame you, I would too. So what we're looking for is an entry now, because this is still trending. The target is still there, still trending. So we're going to wait for that setup. Now let's get rid of this right here. And let's go look at places that this might have set up. And let's use this little thing. So what we're going to look for is places where we pull back right in here. I'm going to redo that. There we go. I moved it up higher because this is actually around a 3/8 trap entry right here. This would not be, but why couldn't somebody, enter in that level? It's like this right here. I'm going to do this in red this time. This is not a 3/8 trap entry. This, however, would be a 3/8 trap entry. This is a 3/8 trap entry. This is a 3/8 trap entry. How do I know this? One, I cheat. Oh, well, sorry. It's not showing it here, but see these codes I have up here? It tells me when it's a 3/8 trap. Actually, this one is, today is doing it. See right there, daily trap. It is in a 3/8 trap. So I cheat by doing that. Another thing is you really don't need to know that. You just need to know it's close to the T-line. That's all. Everyone that's close to the T-line is going to be a 3/8 trap. So with that said, are we in a 3/8 trap right now? Yes, we are. Is this a 3/8 trap right here? Yes, it is. Yes, it is. See where I'm going here? Nice trend. So what we're going to do now is we're going to wait for the buyers to step in. If the buyers don't step in, I don't really want it. So I want those buyers to step in. Boom, like that. Now I might look at that as a buy. So also you need to be a chartist. I mean, you need to recognize, is that toppy? What's the market doing? Things like that. There's a lot that goes into a chart. So anyway, I hope everyone takes that and goes somewhere with it. Practice charting, okay? So let's take a look at another one here. How about Amazon? How about Amazon? I'm going to get rid of this line right here. And would this be a 3/8 trap? Absolutely. Look at that. Here we pop up. It could absolutely be bought here by somebody. But see how the trend indicator has rolled up over the 50? See how the T-line has rolled up over the trend indicator? Right there, we have a nice little trend. See our little pullback? Would that be a good entry area? I think so. Look how we came up to the dotted deuce here. Boom, 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 boom. And then we just started down. Well, we did break out, I guess, and come right back. We're back down. Are we in a 3/8 trap again? Yes, we are. Yes, we are. Trend indicator is working. Trend indicator is not above the 50, so keep that in mind. So what I'm looking for is if Amazon catches some wind, if it does, which at the close today, the overall market makes you wonder if it's going to do that. But if it does catch a little air here, boom, we start moving up. I've got some longer term targets up there on Amazon. By the way, we don't have enough time today necessarily, but there is the opposite setup on the bearish side. We probably have time today. We have an hour and I'm only at a half an hour, so we do have time. So please, remind me if I don't do it, but we will go peek at some bearish rounded bottom. It's rounded top breaks or something like that. I forget now. Let's take a look at coin. Take a look at coin. Rounded bottom breakout right there. Boom. Can we do this in different time frames? Of course we can. Let's just back this down. 3-bar chart. 3-bar chart is one of my favorite charts that I use. A 3-bar chart is just a 130-minute chart is all it is. But what it does, it breaks 3 candles down evenly across a day. So this right here, this right here, there we go. That's actually the daily candle, and I can see how it acts. So every three bars here is going to be the daily candle. I find that very useful, like this right here. Now, I don't always use just the day's candle. It could be, and I don't even know if this is the case. Well, we could count them, can't we? 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Oh, it is. So this is one day's candle, and this is what we call a Fig Newton chart pattern. A Fig Newton chart pattern is the opposite of an Oreo cookie. You can tell that we like to eat. So the Fig Newton, you've got that I don't know, whatever you call that, the cookie part on one side, you've got that ooey gooey fig thing in the middle, and then you've got the cookie part. An Oreo cookie is a bearish chart pattern, and it would look like this, right? Oreo cookie, the chocolate Oreo, that white ooey gooey stuff, and then the chocolate cookie part, right? Okay, so this is a bullish chart pattern, and boom. Now this is not a rounded bottom breakout. Sorry, I got carried away here looking at a 3-bar chart. What I wanted to point to, I hope that made some sense. What I wanted to point to is over here. You can use this intraday. This is a 3-bar chart. Let's take a look at an hourly. See if I can find one. That really wouldn't have been a good one. And I'm here. I know I've got some on here. Here is Bumble. Right now is setting up for rounded bottom breakout. Now, the last 3rd bar of today was not cool. Just very, very uncool. So I don't want to be long this. What I want to do though is keep an eye on it, because we have entered the rounded bottom breakout setup. So I want to keep an eye on it, and I need to see buyers. If I start to see buyers, okay, I see a trade. On the other hand, look through here. Rounded bottom breakout. Now we did fall apart right here, and right here would have scared the devil out of you, no doubt about it. So maybe that's, maybe here you would have said, to heck with Bumble, this thing is driving me nuts. But right in here, oh yeah, let's go for it. Here we gap up, bullish chart, bullish candle, not so bullish, Fig Newton chart pattern. So you buy about, the top of this candle, a breakout of those two, right there to the dotted deuce, 4.5%. This is an intraday chart. A lot of people probably get emails and notifications of these people make 4,000% trading an intraday chart. I can't say bad words here, can I? I'd probably get in trouble. BS, how's that? In my room, I would say the real thing. I call BS on them. Anyway, I just do. So, but if you're going to trade an intraday chart, day trading, scalping, look, 4% is a monster for you. It is. If you don't believe me, try it. You'll see. Either way you look at it, if we take from the 50 to the 200 up here, we're looking at 12.5%. So we're right in the ballpark of that rounded bottom breakout. And this is a 60-minute chart. So to somebody, if they're curious, will it work intraday? Absolutely it will. Absolutely. All right, I'm going to pull up the scanner, because I don't have any charts that's, what I did is this right here. I have some charts to look at today for this webinar. But I'm going to pull up the scanner and pull up a scan. All right, I'm going to make this stay on the top. And I'm going to give, I always have to give a little history on this, and it's to give credit to an individual. The blue, some of you probably have been around, might be long-termers here, long-timers, and you probably remember a person by the name of, their screen name was First Wave. their name was Dave Elliott. He's the father of the blue ice failure. Well, there is no connection, okay? There's no connection to the two chart patterns to me or Dave. I knew Dave, but it just turns out it is what it is. I've taken a lot of his stuff and put it into into this right here. And all this is the opposite of this. I'm gonna go back to a daily though. Take PDD here. There we go. So remember, for the bullish, we wanted the 50 period moving average above the 200. And also remember what we started with. We're playing upon two moving averages. And the idea that one of them is going to pull price to it. If the 50 loses its pull and the 200 is below it, the chances are it's going to move toward, not necessarily always to, but toward the 200 period moving average. Okay, so that's what's happening here. That would have been a trade short. It's the same thing flipped upside down, the exact same thing. For those of you that have TOS and other programs might do this, that's one of the coolest things about TOS that I can think of. They have the ability to turn a chart upside down. That's some cool stuff right there. But that's what that is. Let's look at WBD. WBD. I'm going to get rid of that trend line. We could be setting up for that short right in here. There's the 50 and there's the 200. And by the way, there's a rounded bottom breakout right there, bullish. So what we're going to look for is if we fail below that 50, there might be a chance we move down to that 200 here, and that's a nice little 10%. Hope that makes sense. SCCO, look at SCCO. Nice, and this is where charting comes in. If you study charts for a good period of time and you feel like you're a good chartist, then this is where you really knew that chart work. Here we have a nice bearish top. We've rolled over. Notice the trend indicator is red, bearish. We're under the 50 period moving average. We rolled down, rolled up, and failed. We're rolling up again. That's not a sign of bullishness, by the way. 50 there. Now let's just scoot right on down here for about 19% to the 200. Is there a guarantee it's going to get to the 200? Not at all. If it just got halfway. The strategy is not about absolute. It's not about we're failing here and in fact we're going to go down here. Nope. And there's no trading that does that. None. What we're looking for is to follow price and take advantage of that failure right there. Makes sense? I think Foot Locker was a good one today. Oh, I know one we can go look at, and I tried to get in it, but I couldn't get filled. Look at Foot Locker. Holy moly. Look at Boeing. How sweet is that? I tried to in this today, but I don't know why. They couldn't get filled. Beautiful. Rounded top breakdown, I guess. Rounded top breakdown. Make sense? Very cool. Hey, I think I'm out of time. I just realized that. I just realized that.
I was just going to see how long you would go.
No, I could go longer. I really could. Sherry, I'm going to give you a link you might not have because this is, it was just kind of sprung on me here. Where can I post this to you? This, look, here's, let me do this. Give me one sec. I'm the last person, so I get a little, this is why Sherry makes me go last.
I do not make you the last person on purpose. Donna made me do it.
For those that don't know, that's me, by the way, right there. This is a 30-day free trial registration. I don't know where to put here, organizers.
Just send me an email with it. We could do a draw, and then you can send me an email and we can follow up with it.
The draw is for the lifetime membership. And are you going to do it the same way?
No, this is your, okay, let me see. I may have a link from Donna. Just a second.
Probably not for this. Probably not for
Oh,
this.
okay. Okay, go for it. I'm sorry. I didn't mean to interrupt.
No, the draw that you asked me about for the lifetime giveaway, do you want me to pick a number?
Yes. Don't
Okay.
say it out loud, though.
No,
Don't say it out
no.
loud. Write it down,
All right.
and then we'll
I
make
just
everybody choose.
I just wrote it down, and that's for one lifetime membership with Hit and Run Candlesticks, everybody. All the whistles and
Holy.
bells. It
All
has
right,
to
so we want to go between 1 and 500.
hmm
I got two people putting it in now.
Okay.
Okay, 5, 7, 9. Come on, everybody, tune in and put your number in. A lifetime membership to Hit and Run. What does that mean?
That's a lot.
Oh
It,
my.
it's truly a lot. Um,
Wow.
well, while anyone's putting the number in, that link I just gave you, anybody here and I know you're going to send an email out and whatnot, but here's a 30-day free trial to Hit and Run Candlesticks.
Everybody can do the 30-day free trial. When you
Yeah,
go to his website, there's several free trials on there.
yeah,
Hitandruncandlesticks.com, right? That's
with this
amazing.
is a 1 hour coaching. You can set it up with me. The app is worth $900 a month just for the app.
What? Oh
I mean,
my.
this is, there's the link in there. But this is just part of the free trial. This is just all the membership stuff. So this is just some stuff listed here.
Can you put a link in the chat to me,
Um,
and then I'll put it out to everyone, or you might be able to put it out to the whole audience. Oh, I
I
think
did,
you did. I'm
I did.
sorry.
Yeah, no, I
I'm
put a link out there.
sorry.
Yeah, if
Here,
anyone
look.
wants to do that, a free trial. No, and when I say free trial, we don't ask for a credit card.
There you
It's
go.
not.
I just put it in there, guys.
All right, thanks. Yeah, we don't ask for a credit card. It's not like you're going to get billed, 30 days or something. You're not.
All
We
right,
do ask
guys,
for
you
your
got
first
10
name and your
seconds.
email. And if you can't give me that, well, you can't have the free trial. So
Yeah, really.
put your real first name in. Don't put Pocahontas.
Yeah, put a real name.
I'll know that that's not your name. So don't do that. Anyway, we'll do
All right.
that. Are you
All
ready
right,
for
I
the
think
drawing?
everybody's put their numbers in. What number did you choose, Mr. Sadler?
37.
37. Okay, I got a couple of 44s.
If you have two gets it. I mean, can't pick one
The
of them.
closest number is a 44.
And how many are there?
And that would be Sammy.
Sammy, all right. You win, Sammy.
Now, Sammy, what I need you to do, I'm going to put my email in here. I want you to send me an email at tradersexclusive.com and reference your number, and I will connect you with Rick, and Rick will get you all the particulars. Okay, we just want to go through me first so I can connect you guys, and that way we don't have a bunch of people trying to get a no, not that any of you would, but we're going to have a replay of this.
Fantastic.
I've already got an email.
All right, good deal. Thanks for hanging around, Sammy. I appreciate it. And I want to thank everybody for hanging around. Please take advantage of the 30-day trial.
Oh yeah.
Set up the coaching. You'll get a link for coaching. Set up a time. You get the calendar. You pick a time. The whole 9 yards there.
Oh, that's great.
Come in the trading room, ask questions.
Oh, wait a minute. We got a Tucker. Tucker had a 44 also, and he did have it in before we named it.
No, that's okay.
All right, Tucker, I'm going to send you my email.
Yep. If there's 2 at 44, 2 gets it. I mean,
Wow.
Yeah.
Oh, okay.
Amazing.
All right, I'm sending that to you.
All righty.
All right. Rick Sadler, thank you so much. I appreciate you being here with us.
Thanks for asking me to be here.
It's always a pleasure.
I appreciate it.
The value is incredible.
You guys take care.
Have a good night, everybody. I want to thank you for being here. I want to thank you for coming back tomorrow, and want you to know that we'll have the replay will be up I might not do it tonight because it's been a long day, but I may have it up tomorrow before we get done with the day. And just keep coming back. Thanks for being with us. Let me know your big takeaway. And from me, your host, Sherry, and all of us at Traders Exclusive, please have a safe day, trade well, and we hope you will come back again tomorrow. Good night, everybody.